Hello, everybody. Hope you're having a great day wherever you are. Welcome to today's show, right? Today, first one, I want to talk about a report that is published by McKinsey on the state of blockchain. Basically, the title is Blockchain's Arcane Problem. And it basically says the conclusion is basically that blockchain has yet to become the game changer some expected. Or in short, right, there were a lot of hype around blockchain being the solution for many industry problems, but it has proven to, deliver little most of the time. Yeah, let's just read through the first few paragraphs and I give you my thoughts. Blockchain over recent years have been understood as a revolution in business technology. In the 9 years since its launch, companies, regulators, and financial technologists have spent countless hours exploring its potential. The resulting innovations have started to reshape business processes, particularly accounting and transactions. Amid intense experimentation, industries from financial services to healthcare and the arts have identified more than 100 blockchain use cases. This range from new land registries to KYC applications and smart contracts that enable actions from product processing to share trading. The most impressive results have been blockchains used to store information, cut out intermediaries, and enable greater coordination between companies, for example, in relation to data standards. One sign of blockchain's perceived potential is the large investments being made. Venture capital funding for blockchain startups reached $1 billion in 2017. IBM has invested more than $200 million in a blockchain-powered data sharing solution for the Internet of Things. And Google has reportedly been working with blockchain since 2016. The financial industry spends around $1.7 billion annually on experimentation. Now, that is basically the conclusion. There is a clear sense that blockchain is a potential game changer. However, there are also emerging doubts. A particular concern, given the amount of money and time spent, is that little of substance has been achieved. While of the many use cases, a large number are still at the idea stage, while others are in development with no output. The bottom line is that despite billions of dollars of investment and nearly as many headlines, evidence for a practical scalable use for blockchain is thin on the ground, right? So it went on to say, basically, they were showing this chart, right, which is a classical life cycle theory, which basically says new invention will go through 4 stages, and he basically pioneering, growth, maturity, and decline. Blockchain seems to have gone through the pioneering stage, which is where entrepreneurs bring prototype new technology to early adopters, right? And it basically says at today's tipping point, many prototypes have been built, but blockchain technology has not yet seen widespread application at scale, and the future remains uncertain. So basically, it's saying that they think most of the blockchain projects today, right, have difficulty crossing over from pioneering stage to the growth stage. Growth stage is where growing the market demand leads to product standardization and enhancements. After growth is maturity, and then decline. Yeah, maturity is when slowing growth of products and sales with fewer but dominant players. Decline is when technology becomes obsolete, sales decrease, and industry contract. Basically, they are voicing the concern that given the lack of convincing at-scale use cases and the industry seemingly become positioned in the industry life cycle, there are reasonable questions to ask about blockchain's future. Is it really going to revolutionize transaction processing and lead to material cost reductions and efficiency gains? Are there benefits to be accrued that justify the changes required in market infrastructure and data governance? Or is a secure distributed ledger primarily just one option when contemplating possible replacements for legacy infrastructure? Right. Now they also say certainly that there is a growing sense that blockchain is a poorly understood and somewhat clunky solution in search of a problem. Yeah. So now, basically, the conclusion that basically they think that most of the projects out there, investments that have been made into blockchain are basically, is lost. That still to date, we still haven't seen a real use cases, a real strong use cases or killer products, right, that can really propel the industry to the growth stage. That means you don't see yet mainstream adoption of a lot of the blockchain technology or the blockchain resultant products and services, right? Now, the thing is, after having read through the whole article, my sense, and you can read the whole article in the link that you can see in the screen, my sense is that basically, while yes, I mean, at first glance, McKinsey is trying to, put a very negative perception on the whole world of blockchain. But actually, if you look at it, it is kind of balanced, because they do say, right, most of the blockchain projects out there are not delivering. Well, and it is true, right, that it is still not yet, but then they do say that there were a few exceptions, but they do not name those, right? So that's my first point. So the thing is, my take is overall the report seemed like a good wake-up call for the overall industry to really, right, you really need to deliver. You need to deliver sooner. And also maybe we need to have a killer product, right? Apart from perhaps Bitcoin, yeah, that has really seen actual use cases, and which I will talk about shortly. Apart from Bitcoin, right, the other project seems to be still delivering, right, or delivering soon what was supposed to be their use cases. Yeah. The thing is this, right? Then, so the report, it seems that is on a tone, is more like a stern parent trying to talk to the child that, you really need to buff up quickly. You need to beef up your, what you do quickly, right? You cannot misunderstand, right? You cannot misunderstood motion for progress, right? As long as you are doing things, you cannot just, you have to really move fast. You really have to go to the market. And if something doesn't work, you have to iterate and rework it, basically, right? You cannot just not deliver things and just say, I'm still working on it. A lot of projects are in that stage where, we don't see a lot of real value use cases yet delivered. Yeah. So that's what I see. So basically, the report is a good wake-up call, and it's like a stern parent talking to a child that you really need to do something. That's the message I'm getting, right? The other thing is, yes, while it is probably true that they are talking about a lot of the companies investing a lot of the money into blockchain is not working, a lot of them are probably financial institutions whom they probably go in to say they want to invest into blockchain, right, is to improve their trade finance transactions, more transparencies, more efficiency. The thing is that they also have a whole big, this is just a small part of their overall IT transformation roadmap, right, or strategy. So really, it is very hard for an existing institution, like financial institutions, that have existed for hundreds of years, more than hundreds of years, right, to actually work on these massive projects and, to actually deliver things at the same time. It is really hard to expect anything fruitful will come from those projects, really. Second is that, we do have, Bitcoin, for example, how do you say, I can argue that they are going to growth stage. In fact, they are probably at the early growth stage in terms of Bitcoin, right? Bitcoin itself has already demonstrated it is a killer product, right? And it is a solution to a big problem in countries like Venezuela, Turkey, Greece, countries where they have experienced hyperinflations. Then Bitcoin is really the true solution that, the best that, we have today, right? Because really, Bitcoin is the censorship resistance, right? Permissionless, global transfer of value, right? That people can transfer value immediately, right, at very low fees, right? So people in Venezuela, given this kind of the hyperinflation that they're going through, their own native currency, Bolivia, is worth nothing, basically. Bitcoin, in comparison, right, the volatility is actually very little. So what happens is that a lot of people in Venezuela, for them to gain a livelihood, they actually have to sell off their valuables to get Bitcoin to actually buy their daily goods, yeah, for living and just to survive. There are also businesses trying to then, just ship goods out of Venezuela and accept Bitcoin to continue their livelihood. There are also people who in Venezuela, able to source the computers to mine Bitcoin so that they can, to do that, by doing that, they're actually earning better income than the minimum wage in Venezuela. So definitely these countries and this kind of situations, Bitcoin is the solutions, and Bitcoin operates on a blockchain, and that's what makes it work. Without a blockchain, Bitcoin cannot work, right? So basically, in that cases, Bitcoin is really a great solution to a problem, right? But yes, I agree to McKinsey that a lot of other projects cannot claim that they have the same great use cases as Bitcoin. And the other thing is, of course, yes, Bitcoin is still probably not mainstream yet, but in those countries where they have experienced so much problems with the government and the current financial system that they have today, Bitcoin is already mainstream there. But in the modern economies like Singapore, US, right, for example, we are not seeing such a high need yet for this solution. But right, the thing is, we can see that you can prepare for the eventuality. If something like that happens, this can be a very great alternative, yeah. And of course, also to protect against inflation, which a lot of the modern countries are seeing, but probably not as much, of course, as or not as apparent as countries like Venezuela and Greece, right? But regardless, it is still, it is still a good use case. So that's what, so the conclusion is that basically, yes, I think McKinsey report in a way is a great wake-up call. But on the flip side, I do see, right, that there are great use cases also in, Bitcoin specifically, yeah. Next, Washington wants a blockchain campus. There are many regions of the world that are interested in attracting blockchain startups in order to revitalize their local economies. For example, the city of Cleveland is attempting to rebrand as Blockland to attract blockchain entrepreneurs, and its state, Ohio, now allows businesses to pay certain taxes in cryptocurrency. It appears as though another state is making it clear that it wants to foster blockchain innovation, and that state is Washington. The state already has a history of dealing with crypto mining companies, which might provide some unique advantage over other states as well. Specifically, Washington wants to build a blockchain innovation campus. Yeah, so this is very interesting. We already have seen like New York wanting to build a blockchain, blockchain startup venue, and Ohio accepting cryptocurrencies as payment, tax payment, right? And Cleveland want to have the blockland to basically all these states are just trying to be ahead of the federal government, right? Competing against each other to attract investments into their state, because they do see cryptocurrencies as the future, right? And Wyoming also has said that they have passed laws to make it, very friendly and very easy for companies, crypto companies, to want to do any innovation experiment. They can go to Wyoming, right? So all these states, they're competing with each other to actually attract investments into their state because they do see this is a future, yeah. Next, blockchain research now granted tax credit in South Korea. So South Korea's government has added blockchain to the fields of research and development eligible for a tax credit meant to boost innovation. The local Ministry of Strategy and Finance announced the proposed changes to the enforcement decree of last year's tax law, which will be enforced in February. Now, according to the aforementioned article, the result of this amendment will be that 30 to 40% of the R&D expenses of small enterprises and 20 to 30% of large and medium enterprises will be tax deductible. This is then compared, to this much higher than 0 to 2% for large companies and 15% for medium companies, 25% for small enterprises. So yes, again, Korea has basically made it much more easy for innovation to take place in Korea because now they have basically given much higher tax credit for small and medium companies to actually do R&D research to in crypto. Meanwhile, on the flip side, cryptocurrency is still a grey area in Malaysia after government deems it neither legal nor illegal. Malaysia's government still hasn't made up its mind on what to do with cryptocurrencies. The finance minister last year warned companies not to issue new tokens while waiting for the central bank to clear advice. But Malaysia's Federal Territories Minister this week said that government is undecided on whether cryptocurrencies are legal or not. This is really interesting because they have not said it's not illegal, but they also have not said it is legal. But definitely for now, you cannot issue any new coins. That means you cannot do any initial coin offerings. But whether the people in Malaysia can trade and buy cryptocurrency, that remains unclear. Yeah. But basically it means if you buy, then you are at your own decree. Right? There will be no law to protect you. But, so that's what it seems. So very interesting. Now, my take is that Malaysia is probably looking at, bigger countries like US to take a more clearer stance on what they think the regulations should be for cryptocurrencies. And then they will see, what to maybe to follow suit or maybe to tweak further, right? That's my take. But yeah, next. Interview crypto exchange CEO on bringing Bitcoin adoption to India. CCN had a conversation with Prashav Swaminathan, the founding CEO of SDACT, a new Malta-based crypto exchange with eyes toward India and other markets. A native of India, he's an advisor to the 1101 project, which is an attempt at developing a regulated native blockchain in the country. Now, developing a regulated exchange in India with fiat pairs. 1101 enjoys support from several local government entities, as CNN has previously reported. One aspect of the 1101 Foundation is to create a regulated exchange in India as well. My particular involvement with 1101 is more focused on this side of things and also the advice on financial aspects because of my background as investment banker. While ASDAQ has applied for licensing from the Maltese regulators, we will also open a regulated exchange in India, and it will be a joint effort with 1101. Now, this is very interesting because India has actually not, they have not yet deemed cryptocurrency as illegal, but at the same time, they are banning banks from, basically they're asking all the banks to stop all the people who bank with banks to have any dealings with cryptocurrencies. Yeah, that's what they do. So yesterday there was, basically a Twitter. There was a citizen in India when she's trying to open a bank account in the Kotak Mahindra Bank. She can't move on basically by if she doesn't check the box that she promised not to have any dealings in cryptocurrencies. This is very interesting. A bank trying to stop someone to not deal with cryptocurrency despite it is not illegal in India. So this is where the state is in India. And they are expected to announce regulations on cryptocurrency, but again, they have not done so after a long time that they have said they are expected, but still haven't done so. Haven't issued any clear regulations on cryptocurrency. Probably my sense is again similar to Malaysia, that they are waiting for more bigger nations, more powerful nations to have greater clarity first on cryptocurrencies before they see what can be applied and what can be tweaked. Yeah. The other part about the interview is interesting because the Swaminathan, he believes that investment banks will begin to trade cryptos publicly. He says the investment banks he used to work for, Morgan Stanley, has hired traders to look at how the firm can enter the crypto space. He worked there for 10 years in London. We know that Goldman Sachs has also been talking about opening a crypto desk, and also they have invested in Circle. They have, and also a couple of other blockchain companies. And you can also see Fidelity has come out as leaning towards opening a crypto trading desk as well. I think one of the roadblocks they all have is the regulatory frameworks coming from big countries like the UK or the US, where they have most of their activity. Once there's a lot more pronounced, I think we will see these firms entering that space and masse. Yeah, so basically, he thinks that basically all the institutions are actually looking into this space if they have not entered already, right? Because like Goldman, that they have stakes already, that they seem to have positioned themselves already. They have backing in Circle, they have acquired a crypto exchange company called Poloniex, right? They have done many things already. They really have positioned themselves, right? And he is specifically say his old company, Morgan Stanley, are looking at traders, have hired traders to see how they can actually trade crypto. So that ought to tell you what's going to come. Yeah. Next, Thai startup Atomic Pay launches non-custodial crypto payment platform. Atomic Pay, a Thai-registered payment startup, has officially launched its non-custodial cryptocurrency payment terminal for merchants throughout the world. Founder and developer Ben Swift said the platform, which supports Bitcoin, Bitcoin Cash, Litecoin, and other cryptos, eliminates the involvement of a third-party processor, allowing merchants to accept payments directly from their customers. So what happened is, before this, we have heard that, for any businesses to want to accept cryptocurrencies as, payments from their clients or customers, they need to hook up with crypto processor like BitPay, BitGo. And what happens then, they then also have the choice to convert those fiat money into, convert the cryptocurrency that they accept into any fiat money of their choice. Yeah, but now Atomic Pay, which is a Thai company, is coming out with a very innovative solution. Basically, this will allow the client, when they pay in cryptocurrency, it will reach the merchant's wallet straight away without any intermediary in the middle. Yeah. So this is really a peer-to-peer network, right? And of course, why is that? So it's cheaper and also faster, right? And it is interesting that they said more than 1,700 merchants from different parts of the world, including Thailand, Venezuela, Turkey, and Colombia, have onboarded on the platform. The processing fee is charged at a flat 0.9% of per transaction, but can go as low as 0.8% with full know your customer compliance. Atomic Pay does not have access to the merchant's private key and money that goes directly to their cold wallet. Our service allows merchants to receive payments directly from their customers by bypassing a third party. Hence, fees are not deducted from transactions. Our plans are based on post-paid charging model. Merchants only pay for their usage at the end of the month. Yeah, so it's very interesting. That means you accept the payments, but you are not charged until when you have to use those receipts, right, to, let's say, pay your suppliers or change into fiat, then only you get charged by this company called Atomic Pay. So very, very interesting and very, very innovative solutions that, basically it will encourage more merchants to actually sign up. That's what I think. And, given the high number of sign up, it's very encouraging that all these innovations are important. All this ecosystem infrastructure need to be in place to actually help, bringing Bitcoin to more mainstream. Yeah. Last news for today, and it's a bit interesting news. It's just a US presidential candidate, Tulsi Gabbard, bought crypto at height of bull market. So US Congresswoman Tulsi Gabbard of Hawaii is running for president of the US in 2020. In December 2017, Gabbard bought Litecoin and Ether at the height of a crypto bull market, right? According to filings, because she has to actually file. So this is very interesting. It is not clear, but it seems that her chance of winning is quite slim. Although she's a fresh, energetic face on the American political scene, because another senator, Elizabeth Warren of Massachusetts, is also running for president. But whereas she is a more crypto critic, right, who is not so pro crypto, definitely. Yeah. So, and of course, but the thing is, we do see a lot of the people or the staff on Trump's administration now, including his acting chief of staff, are also pro-Bitcoin, Mick Mulvaney, right? So this is very interesting. So yeah, okay, I hope you have a great weekend, great Sunday, everyone. And yeah, please, like and subscribe if you like this episode, and please share with as many friends, out there as possible, to let them see what is happening in the latest space of crypto, that everyone, I think, even if you're not invested, you should at least keep in the know of what's happening in the crypto year. Thank you so much for watching, and hope you have a great day, everyone. Thank you.